Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets and the markets closely associated. Rob, Tori, and Miles in studio today. Gang's all here, and glad to have you back, Rob.
Thank you. Good to be back.
You bet. We're bringing a week to a close. We're bringing a month to a close. Yeah, Miles, why don't you take it away?
We're bringing our week to a close.
Well,
Wednesday to Wednesday week.
That's right.
Because sometimes you pick a day to put a show out on and you just decide this is how the calendar works. So that's what we've done here. Yeah, so looking at our week here at Golden Rule Radio, that's Wednesday to Wednesday markets, which I think a midweek snapshot is not a bad thing to check out from time to time. So from our last recording, we're looking at gold down about 1.2%, sitting just under 3,300, currently at 3,290, but up 5% on the month. Was a little bit better than that, but we talked about the rise and then little reversal we had in gold here. We've been talking about that for the last couple of weeks. So good to see gold continuing to go up fairly consistently over the last 14, 15 months now. Silver also not doing too poorly, just didn't do quite as well as gold did last month. Silver actually down about 2.3% over the last week, but it is still well over $30. It's at $32.27 at the moment, down about 3% in the month of April. So despite the fall with the stock market last week, we're definitely seeing silver make up that ground. Platinum, pretty much dead even over the last week, down about 0.5% at $9.55. Palladium is dead even on the week, still at $9.35, about $20 below platinum. And the S&P is also, like silver, making up a little bit of ground. It's up 3.5% this week to 5,570 and is actually pretty even on the month. So despite the fall here at the beginning of the month, it looks like the S&P has made up some ground since then. And finally, the dollar, dead even on the week, currently sitting just below 100 on the dollar index. That's 99.5. The dollar is down 4.5% in the month of April. So not a great month for the US dollar on the global market. And finally, just because it's been fun to watch, guys, guess what? The gold to silver ratio is still hanging in there. It's still just above 100. Mm-hmm. Yeah, so the market's relatively quiet this week, obviously following the big volatility we saw due to the tariffs at the beginning of the month, but it looks like the initial shock is over, guys, and things are settling back into a rhythm. Where is the rhythm taking us from here?
That's a great question because our analysts over at Wealth Management think we are headed right into a recession. No question.
Well, and we've said on this show that we've been in one.
True.
Right? I mean, it'll be technical numbers that come out that qualify from a definition standpoint, probably. Sentiment-wise, that's probably why they're pointing that way. I mean, we've got, consumer sentiments at 52, which is down 32% year over year. Like sentiment has tanked. And then it's down 8% month over month. So a lot of that does have to do with, Miles, to your point, the tariff volatility, but also the airline industry is saying people aren't flying. There aren't tickets being booked for pleasure travel, if you will. So whether a recession's been declared or not, the airline industry is declaring their own recession. So times are getting tight, but a lot of that is sentiment. To me, I would encourage the listener to match sentiment with reality. So what's the reality? We've got two key 100 figures here. We have 100 to 1 on the gold-silver ratio, right, which is driving a lot of activity in portfolios with what products we manage. But we also have that dollar index of 100. Miles, I mean, do you see that being a resistance point to the upside now just because it's a round number? Or is it kind of meaningless and it's just the way it's playing out in the short term?
Well, we kind of talked about this a couple weeks ago, just the idea of when you're talking about an index, you've sort of got a baseline that it moves above or below, depending on how it's doing in relation to, say, the other currencies. So I think you could almost argue that 100 on the dollar index means that it's, for lack of a better word, let's say, accurately priced at the time. So sure, it's probably going to spend more time around 100 than any other number if you were to plot that out. Yeah. Now, obviously, I think what you're asking really is, are we going to see it continue to grow from here? That I don't know. I mean, we brought this up last week when it broke down into some new territory that we're looking at some of the lowest values in the dollar index in a number of years at this point that we really haven't seen since we started raising interest rates, meaning that kind of all the gain, or at least all the forward momentum that we had in the dollar globally has kind of been accounted for now at this point. So what I'd hate to see is the opposite, where not only are we continuing to hold, if not raise interest rates going forward, but the dollar continues to slip on a global market. That's a pretty big discrepancy, because a weaker dollar at 5% interest rates is much more impactful on the global market than a weaker dollar at 1% interest rate. It's not surprising people want to put money elsewhere if we're paying 1% or 0.5% or 0.25%. It's far more surprising that people are looking at other options when the dollar's paying 4 or 5 or 6% maybe at some point down the road. So yes, I guess short answer, yeah, I definitely think that 100 is a good solid line in the sand that we're currently below. If I had to bet, I'd say we're probably going to see it play around at this 100 level. I don't know if the dollar's ready to take a decisive direction one way or the other, because I think some of the potential positives of tariffs are starting to come in, and we're starting to see some positive news economically and on the war front outside of the U.S.
Well, and here's where I want to step in as a contrarian. I think the dollar is going to do just fine. Go figure that.
Yeah. Well, that's kind of what I'm inching at, I think.
I think you are too. Yeah.
Emphasis on the word fine, not great, not good, just fine.
Well, here's the thing. I mean, the dollar is a concept. If it's based upon the fact that we have 9 carrier battle groups that we can send to any corner of the globe and impose our will, okay, that's one basis for the dollar. And we're also looking at a government that this administration has taken off. The last 100 days, they are shaking the world. Trump is doing his chaos theory, getting into the minds of both our friends and our adversaries, and they are following along. And so America is leading for good or worse. America is on the move. We don't have a president wandering off aimlessly, not knowing who he is, where he is, or who he's talking to. We have a guy that does. And so I think the projection of strength and direction, like you mentioned, the direction of things, I think it's actually going to help the dollar in spite of our overwhelming debt and refinance needs that we have discussed at length here. It's an interesting time to be around, but I tell you, the only real alternative for the dollar, what is it, the euro, the renminbi, the yen, the pound? No.
Well, it can
It's
be
gold.
a combination of them, right?
Yeah, but it's gold. That's
is
the
gold.
only, that's where the big kids are. That's why you see gold touching 3,500 a few days ago. The big kids are shifting over to gold in a very big way. You look at central bank demand over the last 3 years instead of
6 years, really. But
yeah, but if you go back, maybe 12 years ago, 13 years ago, central banks were net sellers of gold. Then they went into a little bit of buying, and then from a few million ounces, plus minus 10 million ounces, and now we're plus minus 30 million ounces a year from the central banks over the last 3 years. So I think the big kids are shifting to gold.
yeah, I mean, the de-dollarization wishes are out there, right?
But
I mean,
it's not really happening.
it's not the reality yet,
No.
right? I think that they would like to limit the influence of the United States through the dollar.
Granted.
Right? The wars have been currency wars.
Granted.
And so if it's going to weaken, part of the weakening recently was Russia sanctions. People stopped trusting the dollar and the U.S. hegemony that way. But if you've got interest rate hikes, that's weak dollar policy. And this president, the same one you define as being so strong, tends to get what he wants, or at least he goes 100% for it. And he's definitely, from the bully pulpit, he's coming after Powell on interest rates, specifically
Yes, he
saying
is.
he knows more about interest rates than Powell does.
He probably does.
And that he should, and that he should be cutting here. Well, that's stimulative, but it's also dollar weakening. Plays perfectly into the hand in the short term to intermediate term. So yes, over the long term, I think you're right. I think the dollar can strengthen. I'm just wondering, with dollar alternatives, primarily gold and some other currencies, the risk of sanctions, if Russia doesn't get in line on these peace talks, there could be further sanctioning going on there. And the refinance of the debt, we'll see. Now, something that's strengthening the dollar is going to be like the treasury borrowing. So that's why I said, listen, listener, match sentiment to the reality. Two strong realities out there that are counter mainstream.
They are.
Treasury.
What's the number? What was the drop in treasuries?
Well, for just the current quarter, the borrowing estimate is $53 billion lower than they announced in February.
Less.
Right, less. So they've already tightened their belt. That's the first sign of reality of a decrease in expectations of debt spending, deficit spending. That's good. And then the shocking jobs report, I mean, that jolted the markets. The job openings, there were 7.192 million openings. 7.5 million job openings were expected. So that's a tightening of the labor market. 7.6 million the month before. So that's a significant improvement in the labor market. And you're not going to hear that. But again, I'm not saying that the sentiment's wrong. I'm just saying maybe it's overshot because economic sentiment on top of inflationary concerns. So you have us headed towards a recession if you ask the person on the main street.
And I think we are. I think you can say that with confidence.
I think we've been in one, and it could certainly worsen in the short term, or things could start to work and it never materializes. We don't know. And if it's not, and economic numbers are actually coming in better, like all the news was April's the worst stock market since the Great Depression. What did you say, Miles? S&P like flat on the month? What happened to the worst
flat.
April since the Great Depression? You're not going to see that in the headlines. So match reality with
Good word.
compared to the sentiment.
Good word. Well, on the geopolitical front, it's interesting that China blinked on the import tariff on ethane. They dropped the 125% tariff. Interestingly enough, they're running out of copper, and yet copper's down. Go figure that one. But fires are breaking out in Israel. They have the largest fire in the history of the country that they're desperately fighting right now. So there's still a lot of instability out there. What else is going on?
Was that started by a missile? I don't know. I haven't.
No, they think it was started by terrorists.
Okay. Yeah. That's one way to hit an economy, that's for sure. Our states have all learned that. But you just talked about copper. I mean, there's another counter sentiment reality, and that is this broad-based commodities price contraction. Right? I mean, copper, look at oil, look at natural gas.
Look at oil. Oil's down 3% today.
Look at that. But look at natural gas from peak to
that's
trough.
what I was going to say. That's cute. Oil's down 3%. Let's look at natural gas.
It might be the little
adorable.
brother, but what are the numbers on
cute.
gas?
A little oil did 3%. That's so cute. Yeah, natural gas futures. Let's see here. What I say earlier, going back to the March 10th high at about $4.90. We bottomed out at $2.85. So yeah, you're looking at about a 6-week drop in natural gas at around 42%. It's bounced back up a little bit since then. Yeah, global natural resources all over the place. Copper, platinum. You mentioned,
aluminum.
Rob, you mentioned copper. Copper coming down. Come on. We've had the same conversation about platinum for years. I don't know where the platinum from Russia is coming from. I think it's getting remelted and restamped in China. But the platinum's coming from somewhere. So, yeah. So we'll see where the copper ends up coming from.
All of that is disinflationary. Rather than it being inflationary, if the broad-based commodities sphere was spiking in price, now you've got a problem.
Yeah.
But you don't. And some of that has to do with imports dropping and manufacturing dropping in China and that sort of thing. But it does. It helps make prices either stop inflating or actually start to deflate. And that's, again, counter to the market sentiment. But on the geopolitical front, I know I'm bouncing around, but of greater concern, I mean, there's new flags being waved here between Pakistan and India. For some reason, the U.S. media is just not covering it. But they had a militant attack from Pakistan in Kashmir into India, and 26 people killed. And it's triggered a bunch of outrage in the Hindu community. Now, these are two countries that have literally picked up arms a couple of times before. Now you're talking about, again, nuclear.
Because they're both nuclear countries.
They both are. And this isn't going well. So we'll have to see how tensions get eased on that front. But keep your eyes and ears open on the India-Pakistan conflict.
Wow. That's going to change the gold market because Modi just last week said he'll balance the trade deficit by buying U.S. oil, U.S. gold, and U.S. silver.
Well, there you go. I mean, all of that could be on pause. I mean, we'll see what happens if war does break out. So a little too early to say, but another example of an underlying fundamental that can be a tailwind or a headwind for what we do.
So that's going to do it this week for Golden Rule Radio. As always, we appreciate you joining us. If you liked what you heard, hit the YouTube buttons for us. That definitely helps us out. But better yet, why not give us a call, chat with one of the advisors here at McIlvaney Precious Metals about your personal portfolio. You can reach us at 1-800-525-9556. You can also find us on Facebook at McIlvaney Financial or Twitter at ICA Gold. Thanks again for listening and have a great week.